Bitcoin is currently minus 9% down on the month, but is this market manipulation or is this actually normal price action? Let's talk about September in a little bit of detail, but then we'll be talking about October, November, and December monthly trends in a lot of detail. Subscribe to the channel for more videos like this in the future. Like this content if you enjoy content like this going forward, and let's dive right into it. Bitcoin has experienced 9% downside this September, and in fact, it's even experienced 11% downside if we consider this downside wick. And what's interesting is that this graph right over here doesn't really take into account that downside volatility. So if we look at all of these figures generally across the whole chart, it doesn't take into account downside volatility, so that's really important to keep in mind. But if we look at September as a whole here, 8%, 7%, 7%, 5.5%, 7%. In a previous video, I was talking about how this isn't out of the ordinary when looking at price action from 2017, 2020, 2021, even 2018, where it was 5.5%. This sort of downside isn't necessarily out of the ordinary, but check out that previous video about September, because we're going to be focusing on October, November, and December monthly returns. So let's look at that, because we have some really interesting data to go through here, because it's a halving year. 2024 is a halving year, so we need to focus on previous halving years. So if you focus on 2016, plus 14% is what we saw in October, followed by plus 5%, which is single digit upside, and then 30% double digit upside in following December. So we've seen double digit, single digit, double digit upside consecutive green months after a September in a previous halving year of 2016. Whereas if we focus on 2020, for example, 27% upside, 43% upside, 47% upside, so double digit upside across the board after a September. And in fact, if you focus here, for example, on 2016, when we had upside in September, then you could argue that the upside in the 3 months that followed was a little bit limited compared to when you see the halving year of 2020, where we saw single digit downside for September, then we saw double digit strong gains in the following 3 months. So the takeaway here is that if we see a mediocre single digit downside month in September, then that actually has ramifications, positive ramifications for the following 3 months afterwards in that halving year. Because as you can see here, 2016 plus 6% upside in September, and then we still saw great upside, consecutive upside, but nonetheless it was a little bit tapered, 14%, even single digit upside, which is something we don't always see in November. November typically is a strong month, although you can see here in 2023, November is 8%. So it does sometimes happen, but in a halving year, really important to keep in mind that we see in halving years, October, November, December, we see 3 straight months of green price action towards the upside. And if we see a mediocre single digit downside month in September, then that can really have great ramifications in terms of having positive October, November, and December months. Now, before we talk about the next part of this video, I want to focus also on the pre-halving years, because that has some important ramifications as well. So as you can see, in the pre-halving years, we tend to see, and in this case, 2023, we tend to see some strong price action towards the upside in October, November, and December. You can see double digit upside here, single digit upside, double digit upside just about. But if we focus on 2015 here, then 33% upside, 19% upside, 13% upside. And what's interesting about that is that we always saw a single digit return in September, a single digit positive return in September. The same thing happened in 2023, 3% downside, and then we saw some really great upside in the following 3 months. So just notice then, if we have single digit upside for September in a pre-halving year, we then have double digit upside, really great upside months in October, November, and December. Then in the following halving year, we have 3 consecutive green months in October, November, and December. And if you look at 2023 here, then just have a look. We see single digit upside in September, and then great months of upside in the October, November, and December of that pre-halving year. So because we had a great October, November, December in a pre-halving year, it does look like we could have a great October, November, and December in the halving year because we've seen that happen in the past already. But let's talk about the other pre-halving year of 2019. And we can see here that 2019 is very different. You can see double digit upside, but then double digit downside in November. December sees single digit downside. But you can see that the tendency is nonetheless, no matter the pre halving year, we tend to see great halving year returns in October, November, and December. Here's the same halving year as well. Great upside. But the other thing to notice here is that 2015, if we have a strong October, November, and December in the pre-halving year, then maybe those returns in the halving year of October, November, December, those are going to be a little bit more tapered off compared to if we had a pre-halving year which was relatively red, but then you can see that we have 40% gains in November and December in the halving year. So if we have a underwhelming, underperforming pre-halving quarter four period, then that halving year is going to potentially bounce back in terms of performance. So in 2023, we had a strong October, but single digit, just about double digit upside in 2023 in the pre-halving year, October, November, December years or months rather. If that then translates into this halving year, having some really great returns in October, November, and December as a result, because we haven't really seen a great upside period across quarter four in the pre-halving year, maybe we get that in this quarter four for 2024 in this halving year. So let's talk about this sort of upside in the halving year. And let's talk about what that would mean for this current price action in the Bitcoin chart. So we know that we're down minus 9% for the month, not talking about this downside wick because that would be approximately 11%. But this is 9% based on candle bodies. And if we were to see that upside of 14% like we saw in the halving year in October, for example, then that would essentially mean for this current Bitcoin price action, we'd get back above a very key level of 60,600. And 60,600 is the support that Bitcoin was holding for multiple months, almost 6 months, in fact. It was holding it as support, and this was also the reaccumulation range low here. And typically, we tend to see Bitcoin develop post-halving ranges, but in this cycle we've seen this range low get really decimated on a few occasions. Nonetheless, we've seen lots of bargain buying opportunities below this range low, and history may repeat itself once again in this instance, but we would need to see price recover back above 60,600 once again, and a 14% upside like we've seen back in 2016 of the halving year. That 14% upside would get us right back into that range. But what would 5% upside really mean for us? Because 5% upside, like we saw back here in November, for example, and 30% in December, those are going to be the ones we cover next. If we see 5% upside, it doesn't really get us anywhere, does it? It just gets us somewhere into this sort of resistance checking zone. So you can see that this was a support and this was a support here. But if we turn this into resistance, then it could mean that we're going to confirm a breakdown, although it wouldn't really get us to 60,600, which is the key level that needs to turn into a resistance to confirm a breakdown. But really rejecting from 56k after a 5% move like we saw in the 2016 halving year of November, that wouldn't really be bullish. It would be something that would get us a bit into a bit of trouble. But 30% move towards the upside like we saw in December 2016, that would get us to 70k, and that would be really interesting because it would get us very close to those old all-time high regions right over here. It would break this lower high on the macro view, so we do have a downtrend developing here. On the macro, this is a series of lower highs that's been continuing for a while here, and 30% move towards the upside would invalidate that lower high and of course get us back into this range, and not only get us back into the range but get us quite close to potentially breaking out from here, although 30% would fall short from the range high by just a few percent. It'll be interesting if we see yet another macro lower high develop as a result of that 30% move towards the upside. But let's focus on the halving year returns here, which are going to be 27%, 43%, and 46% as we've seen in the halving year of 2020 across October to November to December. And what could that potentially translate into? A move from here getting us to 68k, that would be a 27% move. What would be interesting about this is that we do get back into this range, into this post-halving reaccumulation range, which would really be positive for resynchronizing with post-halving tendencies. But we could be in a potential situation where we once again upside wick, just like we saw here, but ultimately reject from this resistance on the monthly time frame, and that's something that we really wouldn't want to see. Rejecting from here, it would break this series of lower highs, but it would reject at this resistance here. So while we do break the lower high resistance in this scenario, it would still potentially reject from here, potentially produce some upside wicks, and getting into 27% upside from here, that would necessitate some upside wicking beyond here before potentially rejecting from here. But of course, 42% upside like we saw in November of 2020, that gets us into new all-time highs. That gets us for a breakout from this reaccumulation range. That gets us to 77k roughly speaking, and 46k of course gets us into 79k, which would be even better. So it just goes to show that we should be focusing on halving years right over here, and halving the 2016 halving year showcases to us that we tend to see 3 consecutive months of some decent upside price action. 2020 also showcases that we can have double-digit upside, especially if we've seen a very weak and underwhelming pre-halving year. If we see a relatively strong pre-halving year like we saw in 2015, then that unfortunately impacts the double-digit upside and ROI potential that Bitcoin can have in the last 3 months of its year. So 2016, you can see that pre-halving year, which was quite strong in the same period, really did impact that upside in 2016. So in this case, in 2023, we had a very decent pre-halving year, but it wasn't too crazy because we did get single-digit upside and just above 12%. That could still mean that we can have a very decent October, November, and December, because previous halving years have shown that we can have double-digit upside, especially if we have a weak pre-halving year. And we didn't have a weak pre-halving year like we saw in 2019, but over here, 2023, that was a decent pre-halving year. So I think instead of aiming for a fantastic, phenomenal double-digit 3 months straight upside period for Bitcoin in this 2024 period from October to December, instead of aiming for a 2020 repeat, I think aiming something in the middle between this sort of 2016 3 months straight upside rally across those 3 months and between this period. It would be a mixture of these two, because we haven't really seen a strong pre-halving year like in 2015 when we talk about 2023. So somewhere between this sort of upside and somewhere between this is something we could still expect, which still means that we can have 3 months straight of upside returns in October, November, December. But I don't think it would be double digit every single month. I think we can have a double digit month for sure, like we saw, for example, here we always saw double digits, but here in December we saw double digits in 30%, 14%. So maybe we do get a single digit upside month in one of these months, but generally double digits, but nothing too crazy. Maybe we do get a 14%, and we can also get a 30% potentially, but I don't think we're going to get 30%, 30%, and 30%. Maybe we need to be a bit more tapered. We'll get something in between this sort of fantastic return and this sort of more tapered return. But nonetheless, the takeaway is still quite clear that really it's something to potentially look forward to, because halving years in October, November, December have phenomenal returns. let's adjust our expectations. We roughly know the historical data. There's still a lot to look forward to, but when it comes to September, it's not really market manipulation what's going on. It's really just normal price activity based on historical trends. We've seen 7% upside in so many periods, even 5% upside, which is quite close. So not market manipulation, normal price activity, and we're going to be looking forward to October, November, and December, which sets up quite nicely going forward. So to keep up with the channel, subscribe to the channel for more videos like this in the future. Like this content if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.